Good morning, one and all. Welcome to Everything Money. Often imitated, never duplicated. Let's do it. All right, guys, welcome in. Let's get to some stuff today. It is last day of the month. Tomorrow starts September. Now, markets turned a little bit on us, which I was pleasantly surprised about, but is it going to last? I don't know. So I've been just digging into everything. I'm probably jumping the gun a little bit early here, but I've been digging into everything. And really, to be honest with you, I just look at it as this market is going to go for as long as the Fed can prop this up. Now, the situation comes in where, and for those hype dorks out there, you won't believe this because you're too young to understand this, but when the market does crash, the Fed's not going to have any tools in their pocket to do anything about it. Now, they could, of course, they can make things up like they did back in the day with mortgage-backed securities, and those were a new trend. Those are pretty recently new trend, relatively speaking. So they can do that, but let's get into some stuff. Bloody September. No, I don't think there's going to be bloody anything. Guys, everything that they said yesterday, I'm sorry, everything that they said last week, let me start with that. Do I want to go to, let's start with Powell. We're on the topic. Everything that they said last week leads me to believe they're not going to stop doing anything, and they're going to use the excuse of, they keep saying full employment. Their definition of full employment, from everything I can gather, is to what it was pre-pandemic. And if we're not going to get there, they're not going to start their taper. Even if they start their taper, they're barely going to taper anything. Maybe they'll taper 10 billion a month, 20 billion a month. Fine. Even if they do that, they're not going to cut the interest rates anytime soon. I'm telling you right now, they're not going to cut interest rates in 2022. I mean, increase interest rates in 2022. So Powell's Jackson Hole remarks have refreshed the rally and stocks because everybody knows exactly what I'm saying. Chairman Powell, ambiguity around the start date of tapering in bond purchases this year gives investors plenty of confidence that the continued quantitative easing will be in place for at least a few weeks, if not months. It's going to be months, guys. Powell has remained unclear about just when a 2021 taper would unfold, and investors have made their own assumptions. Basically, they're saying that it's not going to be that big, and if it is, they're going to. It's not going to be that big. I can't lie about. I can't just even make things up like this. Making stuff up like this is worse than the crypto stuff. The uncertainty leading to the more dovish tone from Powell has given investors what they want. So they're doing $120 billion a month right now. $80 billion of it is in mortgage-backed securities. $40 billion is in treasury yields. Let's see. Here the yield curve is implying. There was something in here that I wanted to say before. Maybe it wasn't this story. Maybe it was something else. So you guys tell me what you think. Maybe I'm completely wrong, but I don't really think I am. I'm just using a little bit of common sense here. The S&P 500 is headed towards 5,000, says UBS. Here's when and how. Okay, here we go. The S&P has posted at least one new closing high every week since the week of June 7th, 2021. That's 13 weeks in a row. I don't know about you guys, but that seems really normal to me. Year to date, the index has posted 52 new closing highs and is tied for the fourth highest index in the history from 1926. There was a weird year in there. I could be totally wrong and off base, but I think 1929 rings a bell of something. But I probably just made that up. It's okay. Don't worry about it. Stocks only go up. It's cool. He said that he sees 5,000. That's his end of 2022 goal, and he sees 4,600 by the end of this year. The S&P has broken the 4,500 for the first time, taking gains of 2021 to over 20%. This might seem surprising given the recent run of negative news, including disappointing U.S. consumers' data and continual rise of the COVID infection. So let's just take a step back here and think about what's going on. So let me take you back to, this is going to be story time with Mo. Let's take you back to February, March, April of 2020, when this virus took over the world. Now, why did the market crash? To me, it was overvaluation, but we can get into that. So people were saying that companies are not going to not be able to continue making money at the same rate because basically the economy is going to be shut down. So we had a massive 38% pullback in a matter of weeks, basically. If you really boil it down, that basically comes down to saying that the companies were overvalued at that point, and that's how it dates back to all valuations. But you can argue. People are going to argue with me and say it was COVID based. Okay, fine, it was COVID based. To fill your argument, it was COVID based. Then exactly what we were expecting did happen. The world basically shut down, and we had this super V-shaped recovery. And now we're getting more negative news, and basically jobs are not back. People are not getting jobs. We are continuously funding the market. There's been over $12.3 trillion of stimulus money printed by the Fed out of thin air. Mortgage-backed securities are being purchased. Treasury yields are being purchased. And the market just keeps going higher and higher. And now they have the audacity to say a recent run of negative news. I'm sorry, there's been negative news for the past 18 months. These people who are just morons just decide to ignore everything. But I digress. And if you don't think that everything that happened back in coronavirus was related to valuations, then you don't understand investing. Here's a picture. During the past year and a half, the U.S. stock market has doubled at the fastest pace since 1932. This is from Bloomberg. So the market has doubled in 511 days. And if you think this is normal, I don't know what to tell you. If you think that this is, I don't know what to tell you. And I know most of the people watching probably don't think this is normal, and looking at this is just like absurd. But man, this is insane. 511 days with a global shutdown, with not being back to 100% recovery, with the Fed stimulating everything. I don't even know. I don't even have words to say. Okay, speaking of that, Zoom. I thought that this was going to just zoom to the moon, but apparently not. All right. So Zoom shares plummet after hours. I think they're down over 10% right now. I saw last night they were down like 12%. They beat analyst expectations on the top and bottom line, but they say that they're not going to continue to make this much money going into the future. And frankly, I was talking about this yesterday with the Bid and Ask Nation in the Discord chat. And I look at Zoom. I'm like, what does Zoom do that nobody else does? There's nothing that separates them. I mean, Google basically has the same thing. Microsoft has the same thing. Apple's coming out with the same thing with FaceTime links. Everything's exactly every. I don't know why Zoom would just be the one to go to the moon, but here it is coming back to reality. And I thought that buying growth, it's just supposed to just keep growing, but I guess I might be wrong about that. Zoom has been the epitome of Corona growth stocks. Usership has increased 458% during the pandemic, and now it's coming back to normal. And I'm telling you guys, if Apple comes out with Apple links and it actually works the way that they're saying it is, Zoom is basically all of these people that hedge themselves on online video conferencing. They're in some trouble. This is a crazy thing. So Apple just hit a new all-time high yesterday and it actually stayed there and closed an all-time high, which is rare. The iPhone 13 is going to have a satellite connectivity feature, and this is incredible. I don't really know of any cell phone. I could be wrong. I don't pay attention to like all the Samsung stuff, but I don't know of any cell phone that does this. I know you can buy a satellite phone, but so basically you're going to be able to communicate if you don't have LTE or 4G or whatever service. So you're going to be able to communicate via text and cell to whomever you need to talk to. And the chip is going to be based on Qualcomm. So such feature would make the iPhone more attractive to consumers who live in or not well-served cellular areas and people who travel that don't have coverage and still want peace of mind of always being able to communicate. And Apple did not immediately respond to this. I should note that, but pretty dope. Next, those of you that love Ikea, I don't think they're public, but this is just a cool story. And something interesting that I noticed down here. So Ikea is making a buyback program so you can take your gently used stuff to Ikea, your gently used Ikea stuff to Ikea, and trade it in for programs. So down here, Piper Sandler's spring 2021 Gen Z survey found that 47% of teens have purchased secondhand goods and 55% have sold secondhand. That's a big number. I didn't know that. So if you want to sell your stuff, put it on Facebook Marketplace or Craigslist. Just don't get murdered in the process. While much of the demand has been for secondhand clothing, Ikea hopes to have that behavior continue on to furniture. So that's pretty cool. I like Ikea. That's pretty nice. That's an interesting store. Where do I want to go next? Let's go to homes. Pending home sales fall for the second straight month. There's some things in here that I don't really necessarily know of. Okay, pending home sales, leading indicator of health of the health of the housing market fell 1.8% in July for a second straight month of decline. There is not enough supply to match the demand for would-be buyers. Now, I don't necessarily know if that's true because we're getting to the point where we're basically pricing buyers out of this market. There's a point where homes get insanely expensive and people are just like, well, I'm not going to go and pay for that much money for a home that's $300,000. I'm not going to go pay $475,000, and that's the point we're getting at. So I don't really know if I'm seeing these home prices out here. Maybe I'm sure many of you are throwing your house on the market. Why not? You'd be crazy not to. If you don't want to be there, or if you want to move, this is a great time to move. So I'm not necessarily sure that it's so much a demand issue as it is, a supply issue as it is a demand issue. But inventory is slowly increasing and home shoppers should be able to see more options in the coming months. So if that is absolutely the case, then we're going to actually see if it is a demand issue. There's a home shortage in North Carolina, Reed says. It seems like North Carolina is struggling on a lot of things. All right, next. All right, before I click on this story, hype dorks, prepare to be triggered. I'm giving you a fair warning. If you don't want to pay attention to this and you don't want your heart broken, I'll give you 5 seconds to tune out. 5, 4, 3, 2, 1. Trigger on. Here's why this billionaire investor predicts crypto will go to zero. This guy, John Paulson, not to be confused with Hank Paulson, cryptocurrencies, regardless of where they are trading today, will eventually prove to be worthless. Once the exuberance wears off or the liquidity dries up, they will go to zero. I wouldn't recommend anybody be invested in cryptocurrencies. Instead, I suggest to put money into bullion. There's very, very limited amount of investable gold. So that's that, guys. I wish he would have given more reason than just saying, well, I mean, maybe his point is once the exuberance wears off, liquidity dries up, everything will go to zero. I don't know. But anyways, sad. I thought crypto was the future. I thought it was going to replace the dollar, and sad. Honorable mention, my favorite. You guys know, those of you that have been watching for a long time, the criminal trial of billionaire Theranos founder Lizzie Holmes starts today. And if you want to read the story, it's on Market Watch. Here's the title. Phenomenal story. You can watch the documentary. You can read the book Bad Blood. Just a phenomenal story. Second biggest Ponzi scheme in American history. Oh, that's an ugly ass picture of her. Okay, Trader Mo _EM. That's my Instagram handle. Follow me on Instagram. Follow Paul at Paul Gabriel. Black money will keep the crypto market moving up. He clearly doesn't understand. Mo is being too cute here with crypto. Crypto sucks. If you want to go make money on it, have fun. But I'm being sarcastic about all of this. For those of you that don't know. All right, let's see here. Let's check what the treasuries are doing real quick. So I like, you guys probably wonder, why do I check these treasuries every day? I check the treasuries just because I want to see if there's, I'm really looking for, is there going to be, I want to see what the 3-month and the 10-year is doing. If I'm getting, basically what this says, for those of you that don't know, if you loan the money to the government, this is basically giving the government a loan. If you give them your money and buy a 10-year treasury, they're going to give you back 1.29% on your money. If you give them money over 3 months, a 90-day treasury, they're going to give you 0.05% back on your money as a loan. If the 3-month yield, if you start getting more money for the 3-month than the 10-year, that basically what that says is that people have more confidence in the short-term stability of the government than the long-term, and that's not a good thing. So if we go back to 2020, and let me try to find, I think it was around February. I think it was February 14th, 1.58. Where's the 10-year? 1.58. Here we go. So let's look at, here's 218. Let's see if I can highlight that. So you have 1.48 on the 10-year. I'm sorry, 1.55 on the 10-year and 1.58 on the 3 months. So basically this was saying that there's more stability, there's more confidence in the government in the short term. So this is called the yield curve inversion. So when you talk about those people talking about the yield curve inversion, some use different time frames, but I use the 3-month and the 10-year. Once those two invert and the 3-month becomes the longer, better return to hold, that's when you're in some serious trouble. So let's see, anything reporting today? Nothing of Stripe, nothing of note. DocuSign reports and Broadcom on Thursday, so be aware of that. If you want to join our subscription software, $26 a month gets you that. You get all of our software, everything, and this is everythingmoney.com, guys. Everythingmoney.com. Go on there, join. $26 a month gets you that. If you want to join the Bid and Ask Nation, $76 a month. If you want to do a one-on-one trading session with me, I have one tomorrow and I think one on Friday. $750, 1 hour, talk about whatever you want. I like to mostly talk about trading. If you want to do long-term trading, short-term trading, day trading, whatever you want to do, we'll do it in that hour time frame. And if you want to do a 1 hour real estate session with Paul, $10,000, $2,500 an hour. And if you're buying a big property, especially in this market, I think you should do some kind of consultation. Now, before I get to your questions, and we're going to have quite a bit of time today, I've gotten a lot of messages and comments on YouTube that people are saying that there was one comment that sticks out to me the most, and somebody was arguing with me about it. This person had $1,100 in their account, and they said they wanted to join the Bid and Ask Nation, but they don't know if they should spend that $1,100. They were like, well, somebody else was saying you should put it in S&P index funds, this and that. Okay. We are a learning platform. We're teaching platform. We are teaching you guys to, I'm not like these other morons on YouTube that say, if you join me, you're going to be a millionaire by the end of this year. It's just not going to happen. And I'm not here to teach you that. If you join the Bid and Ask Nation, you're going to be learning how to trade. So whether you have $0 in your account right now, or $1,100, or $110 million, I am teaching you something that you're going to be able to use for the rest of your life. Nick, who's a Dads with a Purpose, he made a great comparison yesterday. He said it's like college education. You're going into extreme debt, but at least college, to me, college is a waste of time unless you're going to to be a doctor or something like that. But the point is, I am teaching you a skill that you're going to be able to use for the rest of your life. We're teaching you a process that you're going to be able to use the rest of your life, and that's not only in stock. So if you think it's too expensive, or you don't want to do it, or whatever, that's on you. Have fun, do whatever the hell you want to do. If you actually want to learn and enjoy the process and be in a community with like 800 people in the Bid and Ask Nation, 800 plus, then join it. You'll do very well, and you're not going to leave, but you're going to do very well just by changing your mentality. And yes, college sucks. Okay, next. Give me some stocks. I'll run through them, and that's that. I'll start with Verizon. Okay, S&P is down this morning. Sell-off today. Guys, there's not going to be a sell-off. Sonny the Indian made the bad guy. College was a very expensive vacation. Amen to that. College is stupid. All right, so Verizon. I actually I was looking at Verizon as a value play. I think there was a reason that I leaned away from it, and I can't remember what it was. But here we go. So downtrend. To me, this is something that I would just let it turn up into the sweet spot. If you want to swing trade it, let that red line get into the sweet spot also. But just be patient with Verizon. I think you will be very happy sometime down the road. Let's see. Let's look at Baba. I'm telling you, I think I looked at the Chinese news today. It was very not interesting to me. This is a short covering rally, guys. I don't expect Baba to stay at this point I think they're going to do the same thing they did last week, where they popped up a little bit and they pulled right back down. So they popped up a little bit. I don't know. I mean, I think this is a short covering rally. That means the people that were short on the stock to this point, they're buying their shares back, and it's popping up a little bit. And that's all I think this is. So I think that Alibaba is going to stay around here for quite some time until you get some kind of news that the Chinese government is going to stop meddling, as they say. PayPal. Why does everybody want to look at PayPal today? It was up 4% yesterday. That's why. So they've had a very interesting run, and technically, all of this is a snapback. They had a great move up, and all of this is technically a snapback. So if you're a true trend trader and you're very patient and good, then you would have still been in this all throughout this, because your trend never changed on you, and you're being rewarded now. So it's moving right back up. It's going to fill this gap. It's definitely going to fill this gap, and I think you might push towards all-time highs. And remember, as the market goes, PayPal is going to go. It's something that definitely moves the market up because it's tech. Next, TMHC. Oh, Taylor Morrison. Love Taylor Morrison. Of all the cookie cutter homes, Taylor Morrison is my favorite as far as quality goes of home. I love Taylor Morrison, and I love the name too. All right, so what do we got here? Okay, so I'm going to look at Taylor Morrison, then I'm going to punch over, and I'm going to look at like Pulte and Lennar. So this thing is just starting to just move into that sweet spot. I love that it's right above the 100-day moving average. You got to just be patient with this. Let's look at Pulte. I think it's PHM. I bet it's going to look similar. Okay, not as similar. So let's look at Lennar. And what's the other home builder? There's one more home builder. Actually, I like Taylor Morrison the most. What was that? TMHC. Okay. Corsair. Everybody wants me to look at Corsair. Corsair, CRSR. Corsair gets huge volume today. Yeah, we'll see about that. What's the bump from? you guys tell me what the deal is here. So they've been there were okay, so they were oh, this is that video game thing, right? Or headphones or something like that. I don't remember. But anyways, the trend here is fine. I would not be opposed to getting I told somebody this morning in Paul's Super Shorts, I'm fine if you want to jump in this for a swing trade. First of all, if you've gapped up here, please take some of your profits off the table. That's number one. Number two, if it settles down here and it starts moving towards this 100-day moving average, capitalize on that. You can grab that thing and run it up to the 100-day. But if you're in this and you got this gap up, make sure you take your profits on it, because I have a feeling it might pull back. Okay. What I want to do Amazon. That's one I want to look at. Cash said Corsair. Some YouTuber was looking at it on his buy list, and the intrinsic value jumped midday. Okay. Amazon. So the good news about Amazon is going to fill this gap. It's just a matter of when. So it is a downtrend right now. They haven't broken that, but if they keep making moves like this to the top side, like they did yesterday, they're going to. I think if you want to jump into Amazon from a trading perspective, I think you should jump in right over the 50-day moving average. Get through that resistance. You'll be through all four major moving averages, and you'll be just fine from there. I want to look at UPS. Nobody said it, but I want to look at it. Again, gap's going to fill. This gap will eventually fill. It's just a matter of when. So, okay. So first of all, I'm looking at this from a swing trading perspective, and I think I'm going to move a lot of going into swing trades, because these long-term trades are really difficult to do. I've never seen a tougher market in the how many years have I been doing this? 18 years. Guys, smash the like button for me, please. We only have 91. Let's smash the like button. Get it to 200 by the end of the show. I think I'm going to start moving towards swing trading more, just because it's just so difficult and it's because of the low volume. Because of the low volume, that's why it's so difficult to get into this market. So that volume creates that volatility, and that volatility creates these sweet spot reversals in here, and everything, it just derails from there. So I think I'm going to start moving over to swing trades more. With UPS, it's just starting to move up into that nice sweet spot area. Break through this resistance point of 195.89, and you'll have a really great run up to the 50-day moving average, just above $200. So this is a good looking stock. I just randomly made this one up, and please use it. Fiverr. I remember this one just did something crazy recently, right? That's right. It gapped down. So again, here's another one. Your gap is gonna fill. Now this one's gonna take a lot of volume, because this is a newer stock, isn't it? Maybe I'm wrong. Oh no, it's not a newer stock. Okay, so they've had a pretty great run. That gap will fill. You got to just be patient here. You need to get some volume coming in. That's your issue. And to get through these four major moving averages, you're gonna need volume. That's just how it's got to be. Name of the game, guys. Name of the game. Okay, GSK, GlaxoSmith. They're bouncing around quite a bit. Woo. Okay. So right now they've definitely turned into a downtrend. That means that red line is under 80%. The good news is they're kind of holding that 25-day. They will hold that 50-day pretty tight. And then that's basically a free fall down to the 100-day moving average. So, which is only like $1. So, where would that be? Let's see, draw a line right here. Yeah, and that's basically it. So, if you want to short this thing, I just don't see the next. Yeah, you can get down to like $38, like right in here. Juice might not be worth the squeeze on this one. Juice might not be worth the squeeze on this one. Google, and then I will look at HPQ. Sure. Holy. Yeah. If just keep adding on new all-time highs. Every time you make a new high, add to it. HPQ. Dun, 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 dun. What time is it? 9:27. Sweet. Guys, keep smashing that like button, man. You guys did a good job. Good job. All right. HPQ. So they had a great day yesterday. I know that's why people are asking about them. Guys, play this on a swing trade. It's great. You're getting good volume. You're through moving averages. Run this thing up to the 100-day moving average, and you'll have a pretty nice day on it. What did it close up yesterday? Just be careful of that bid and ask difference. No, it's pre-market. I'm sure that thing will settle down. Why don't we look at CWH? Isn't this Camping World? So is that I want to check out that bid and ask. See, it ran into the 100-day moving average yesterday, but this is a great looking swing trade. If we can just get a little bit of volume in here, break through that 100-day, this thing will return back to like $44 a share and maybe go above $45 a share. Just need some volume, but it's looking pretty good. What do we have next? Dollar Tree. Let's see. Dollar Tree. DLTR. Okay. Oh, they got smoked recently. So this is funny, guys. Look at this. This was their previous earnings call. And I say gaps always fill. The gap did in fact fill, and then it actually filled on. It took an entire quarter to fill, and then boom, sad. So the good news, this gap will likely fill. I mean, Dollar Tree is a pretty good company, so let this thing get moving. It's gonna take a lot of time for this to happen, but just keep watching it. Keep watching it. You're gonna be happy with that one. I actually kind of want to look at Dollar Tree from a DLTR value. Let's see what the value play is there. XOM. Why don't we look at some oils? Everything that was happening with Hurricane Ida. Okay. So, yeah, they're getting beat down a little bit. If you want to short these guys, I bet you have a short to $52. I bet you have a short to the 200-day moving average. Let's look at BP. Let's look at Chevron. Same thing with BP, except it's going to probably hold that 200-day CVX, Chevron. So Chevron's interesting because it's in a downtrend. It's below its 200-day moving average. There is not much support in here until you get down to this 92.50 area. So that might be something. Bad margins on Dollar Tree. Well, when you, I don't know. I don't know. What's the margin? Who just said that? Tom Burden. What's the margin on that? Please tell me. What's their overall margin? What do I want to do? I want to do one more. Guys, market's open right now. Shell, RDS. Let's see what Royal Dutches are doing. Okay, that's not going to work, so sick. All right, Shell, let's do, I'll do one more. Whoa, I don't want to do Intel. Intel's so boring. I'll do Intel while I wait. It's so boring. There's nothing happening here. It's literally the same thing every single day. This thing is not moving anywhere. NSA, do you want to spy on me? Let's see. National Storage. Holy God, is everybody just storing stuff nowadays? All right. Keep adding on new all-time highs. That's it. Keep adding on new all-time highs. And I think you will be a very, very happy person in the end. Oh, space. Let's do space. And then I'm going to get out of here. So I thought that they were supposed to be like way up here, because they went to space, but I guess not. You got to have consensus. You got to have a consensus. You need volume. You need a consensus and direction. This is just basically going sideways. It's either going to go this way or it's going to go this way, and we don't know yet. So get some engulfing candlesticks in one direction or the other, and everything's going to be fine. If you want to try to swing it right now, you can run it up to the 25-day moving average, and you will be just fine. So, all right, guys. All right, CZR. Johnny said, I will love it. Johnny, are you willing to risk your reputation on this stock? Why would I love this? I'm trying to see if he's... yeah, I don't love this. There's nothing I love about this. Sorry. All right, guys. Johnny, get 6 of your friends to smash the like button for telling me that I was going to love something, but I don't love it. I'm just kidding. I'll see you guys tomorrow. You guys have a wonderful day. Follow me on Instagram. Smash the like button. No live stream today at 2 o'clock, unfortunately. Normal schedule will resume next week. But I'll be here tomorrow for you, and I can't wait. And guys, thank you. I don't really say this very often, but I want to, and I should. Thank you guys for the support. This is incredible. You guys are just the best. So keep supporting us, and we're going to keep supporting you. And the software is going to get better. The Bid and Ask Nation is going to get better. Everything with all of this is just going to get better and better. So you guys are great. And I will see you here tomorrow morning. That's it. Have a great day. Peace.